All right. Well, hello, everybody. My name is Sean Bray, and I am the Vice President here at Tax Foundation of Global Tax Policy. I am honored to be joined by the Chilean Finance Minister, Mr. Jorge Quiroz, and I appreciate you being here today. I would like to just start by, I don't think you need too much of an introduction. If those are interested in his introduction, his biography, of course, it's available online. What I'd like to do, though, is start talking about the Chilean tax reform proposal that the new government, of course, of which you are a part of, has introduced in April. So what I'd like to do first is just give everybody kind of a general background on Tax Foundation's International Tax Competitiveness Index, of which we produce every year. I'll just start by giving a brief introduction on the International Tax Competitiveness Index. For those in the audience unfamiliar, the International Tax Competitiveness Index is an annual publication that Tax Foundation publishes every year, in which we rank the competitiveness and neutrality of all the OECD countries' tax systems. We've been doing so since 2014, and our next edition will be coming out in October of 2026. So this gives us a nice opportunity to reflect on Chile's rankings over the last 10 years or so, and hopefully discuss a little bit of how this proposal might change some of the rankings for Chile in the future. Last year's ranking, Chile ranked 28th out of 38 OECD countries overall. Particularly, Chile is strong on consumption taxes and property taxes, but in the corporate income tax space, Chile has a lot to catch up, so to speak. So, for example, the overall ranking for Chile's corporate income tax system is 32nd out of 38. On the corporate tax rate, which is 27% currently, it's 28th out of 38. And on the cost recovery rank, it's actually 38th out of 38. And so that's obviously there's a lot of work to do here in the corporate income tax system. And so that's where I'll first lead you with my first question, sir. Obviously, during the recent elections, tax reform was a main issue. And one of the first TV addresses, the president actually talked about his tax reform proposal. So I'm wondering if you could just give us a brief background on the Chilean tax system and why right now is a good time for tax reform. Why is it so urgent today in Chile for a tax reform?
Thank you, John. Well, just a very brief background. Chile had a very attractive tax system and that was implemented during basically the second half of the 80s by the so-called Chicago Boys, okay, economists that were running the economy at that time. And one of the key features of the system we had by that time was a very low corporate tax rate, and which was integrated. When you paid your personal income tax, you could credit the tax you paid as a shareholder of the corporation. And that system, what produced was first, it increased the rate of savings and of investment within the companies. Particularly savings, because when you have a too high corporate tax rate, there are incentives to go into corporate debt, okay, because of the tax shield. So having a very low tax shield actually makes equity almost the same as debt, and companies became much stronger with a stronger capital foundation. And that was sort of the system we built. It was very crucial in terms of building savings and investment. And that system was basically kept when the country returned to democracy in the late 80s. The corporate tax rate it did increase, okay, but it went from 10 to 15%. Then later on, 10 years later, to 17%. Then it was kept on those levels, always integrated, okay, with the personal income tax. And then it increased to 20% in the early 2010 because of an earthquake. It was supposed to be a temporary increase in the tax rate, but then it was kept at that level. And then a major change happened in 2014, okay? In 2014, as part of a general wave of all these claims about the income distribution and so on and so forth, that actually didn't know what we had, okay? We had a country that was prospering, growing, and actually income distribution was getting better every year, but there was this time of all this culture. I think it was kind of a global phenomenon too, and Chile suffered the mostly. New generations that thought that you could raise taxes and have lots of money to fund social expenses without any cost in terms of investment. And that was done in 2014. It coincided with a decline in copper prices. And the two things together, not only the corporate tax, it went up, it was a huge increase from 20% to 27%. Right? And also disintegration of the system. So it stopped being integrated, it became only partially integrated. And as a result of that, and a lot of other regulations that step in, okay, plus commodity prices, plus one thing and the other, the country's growth stalled, okay? And we started growing only at 2% per year. That has been our growth rate in the last 10, 12 years, since 2014. And this government, our government, was elected as part of a counter movement against that trend, not only against the trend in terms of taxing, but also in terms of over-regulation of the economy. So we put the tax reform at the center, as a centerpiece of our program, together with measures for fiscal balance, which was also kind of a slippery road in terms of foreign debt and so on. And also in terms of another piece of the economic program has been the deregulation of the economy, particularly in terms of permits. I mean, we're looking for a streamlining of all permits and a strong reduction of red tape. So those are the three pillars: tax reduction, fiscal order, and regulation or significant reduction of red tape. And so this is where we are now, proposing a reduction of 27% corporate tax rate to 23%, but also reintegration of the system, to have a system again integrated.
That's super helpful as a background. I think especially for this audience who may not know as much about the Chilean tax system as those here, I think that's super helpful to have that context. You mentioned one of the proposals is, slowly moving down the corporate income tax rate from 27% to 23%. I think it's by 2029. And there's also a fund, an Invariability investment fund. And I'm wondering if you could talk a little bit more about those details of the proposal and how you think by lowering the rate and by kind of increasing investor certainty with this invariable investment regime, how that would help increase competitiveness and certainty, which I think is also another main aspect of the government's priorities here.
Yeah, that's right. We're looking to provide certainty, not only in terms of taxing, but also in terms of the regulatory framework. And regarding taxes, the country used to have, since the mid-70s, when it went out of socialism, we had a socialist regime for 3 years, Mr. Allende. We had, in order to recover confidence back in those years, early years, we had this system by which foreign investors would be assured of the tax rate, signing what's called a contract with the state. Eventually, people felt that we were mature enough so we could get rid of that thing. Okay, so we let the system die. But then we started doing all these reforms, right? And people tried to make changes. Every government, I think our effort will succeed, but there have been efforts before. So in order for this tax reduction to have a real effect on investment, it has to come together with some invariability treatment. Okay, in our proposal, every investment of $50 million or more will have the privilege of having invariability in terms of the taxing that were associated with the returns of that investment. Okay, at the regime of the new corporate tax rate that will be in place. That will be done again with a contract with the state. That doesn't mean that we are fixing the tax rate the country will have in the future years with new governments. I can change, of course, the tax rate in the future, but the investments that are made under this regime, with this tax regime, we have a 25-year invariability pertaining to the returns of that particular investment. And that is in the same spirit of what the country had before, in the 70s, 80s, and early 90s.
I'm wondering how the government arrived at the 23% corporate income tax target. It's obviously now at 27%. Just for context for the audience, the OECD average is slightly less than 23%. The South American average is actually above 27%, it's 28%. as of last year. So I'm curious how the government came to this target date and what are the costs that might be associated with moving from 27 to 23%.
Well, we came to this number because we use it as reference what the OECD had, at least when we wrote the program. The ranking is even lower. But when we wrote the program, because this has been so controversial in Chile, and people, unfortunately, are not very well informed, many voters. They are not well informed, for example, that this increase, that the increase in the corporate tax rate from 20 to 7% that took place in 2014 was capable of getting not too much revenue in terms of exceeding the GDP growth rate. This doubt between voters whether this reduction that we're proposing, how strong it was, and it's always a good reference for this country, for our country, to have OECD numbers and rates and benchmark. So looking at that benchmark, we focus on the 23%.
I'm curious now, we've established the corporate tax rate, trying to be more competitive, the Invariability investor regime to try to bring some more stability and give investors confidence in investing in Chile. Those seem to be kind of the main points of the corporate tax reform in this proposal. I know there's many other aspects of the proposal, but I'm just focusing on these for the moment, of course, and the integrated aspects that you mentioned on the personal income tax side. So I think those are kind of the core of this reform. And I'm wondering, from a legislative perspective, this proposal was debuted in April. It was, as I mentioned, one of the first things that the government did when it came into office. And it passed the House, I think, about a few weeks ago, but it still has to go through the Senate legislatively. I'm wondering, within this legislative process, are there things from your original proposal that have been compromised or changed or negotiated?
Yeah, we were able to pass this law, at least as far as the tax reform goes, with an ample majority in the House. Okay, the law includes other things. Okay, in terms of the deregulation, reduction of red tape, and other things. But regarding tax, the tax part of the law, that was passed with no change, pretty much the way we had proposed to the House, and now we are going to the Senate. In the Senate, probably we will be dealing with some form of negotiation, particularly regarding variability. So a possible outcome, these negotiations are in progress, okay? But a possible outcome might be that we go from 25 years to 20 years, perhaps, no? And maybe to impose a different rate for those willing to have the insurance, the variable insurance. But in that case, I'm looking for a reduction of the tax rate target. So say that we have an insurance of 1.5 percentage point, say, okay? Then our objective would be, say, to lower the tax rate to 22%, not 23%, and then add the 1.5. Someone who would like to have the variability guarantee, we have to pay 23.5, okay? Now, it's important to mention, and this is relevant for foreign investors, that the exit rate for a foreign investor has not changed in Chile in many decades, okay? Has always been 35%, and it still is 35% under this report, but you can use the corporate tax rate as a credit, that's 35%. What we have seen is that for investors who stay many years in Chile, still it's useful the local corporate tax rate because it has a significant influence on the internal rate of return of the investment, especially when you have to reinvest money and you reinvest it with the same profits that you're obtaining in the country.
Do you have a timeline that you hope to have this reform into law? Obviously, the sooner the better, but of course, there's a lot of legislative hurdles potentially. So do you have a target date that you hope to have this implemented by?
We proposed the law in April. We had it approved by end of May in the House. That was quite fast, quite a fast track. And now we are entering the Senate. Our goal would be to have the law passed during July. That would be quite fast also, okay? We think that we have momentum We have gathered momentum, and it's in the best interest of this reform to go as quickly as possible. We're trying also to get an ample a majority of votes which goes beyond the government coalition, okay? Which was something that in which we succeeded at the House. We had a voting that was much ampler than the votes of our own coalition. In the Senate, it's going to be tougher. So a little bit more ideological, the debate. But this is work in progress. We're working on it.
Yes, for sure. These legislative negotiations take a long time. And even from the U.S. experience last year, we thought we passed the One Big Beautiful Bill Act quite quick, and it still almost took the whole year's time. So of course, these things certainly take time. I wanted to broaden the scope a little bit to see how you might think about this reform in kind of a global context. So we have Chile, in my opinion, is in quite an interesting position. It's in South America, obviously. It's right on the coast, looking towards China. Obviously, it's in South America, which is quite integrated with North America, including the United States and President Trump, who's running a global tariff war at the moment. And so I'm curious how you think broadly about Chile's role in the world and how tax competitiveness, tax certainty, how these principles are important for Chile kind of in this global context. I'm not here to say you have to choose, of course, between which fragmented part of the world Chile should be in, but I'm thinking through, we have the global minimum tax at the OECD. The UN is also working on some of these issues at an international level. So I'm curious how you see Chile's role in the international space when it comes to tax reform internationally, and particularly how this reform at home might play a role in Chile's place in the landscape that's changing quite a bit.
We are probably the country with more free trade agreements in the world. We are a open economy, open to investment from all over the world. China is one of our large trading partners. For example, it's the first importer of Chilean goods, particularly copper. Okay, but on the other hand, for example, the first partner in terms of direct investment in Chile is Canada. So we are a country with a network, international network, and we plan to continue in that level. Okay, of course we pertain to the American culture, Western culture. That is our history. We have a relationship with different countries, and we plan to continue playing with the game in a very open way with everyone, and always enforcing agreements and free trade and free investment. Now, having said that, Chile did have screening procedures in the past. It had screening procedures precisely related to this invariability treatment. With invariability treatment for investment, it has some sort of screening, basic screening. And I think this is something that we would have to look again at. Europe is doing it, the US is doing it, the US is reinforcing some rules. And we, in today's world, where you have global crime organizations and money laundering and all that kind of stuff, there's some technology changes that unfortunately make some of those activities, they give some competitiveness to those activities in today's world, or it's difficult to follow and to control. We plan to introduce some screening in terms of investing, but always keeping a neutral view in terms of which partners want we to work with. That would be our main guide.
Yeah, it's nice to hear. It's particularly difficult these days between a trade war from the U.S. side. Of course, we have national security questions in all directions. And of course, where's the line between just pure protectionism or particular FDI screening for true reasons, for true security reasons? This is always a complicated question. And unfortunately, I think the way the world is fragmenting, it might become a more difficult question over the next 5 to 10 years as your government is in place. So it's a very pertinent question. So I appreciate the answer. But being open is multilateral first is, of course, the spirit in which OECD members generally try to work. My final question is pretty open-ended for you. If you could speak directly to an investor in the United States or in Europe or even in China, who's looking to Chile for this new government coming in, this new proposal, maybe potentially a better business environment, looking to invest, what would you say to them? How would you pitch Chile on the global stage as a place to come and do business over the next 5 years or so?
We're truly believers in the power of the private sector, private markets, free movements of capital and goods, and streamlining to have the lowest bureaucracy possible. We have a lot of work to do. It won't come from one day to another, but we're working very hard on that with some significant results in the first 100 days of government. So if someone is looking to come here, he or she would find a government that is looking to provide a state-of-the-art business climate in terms of friendly to investment. Chile has a lot of opportunities. Chile is a country where you can have copper, of course, lithium, and many other minerals. Also, investment in tourism. I mean, look at Canada. Canada has been a great investor with us. Has had a very good experience. You can ask the Canadians. Have been treated here in the last 10 or 20 years, I would say. So we're looking to have a very good relationship with the investors in the near future. And most important of all, we are working very seriously trying to get something that is very difficult in today's world, which is to have continuity in the future. Our main goal would be, hopefully, to have the next government from the same orientation as ours today. We were pretty much aware that in the Western world, it's the probability of having a government with the same sign next election is very low. But we are trying to make a change here, and we're working hard trying to do that.
I wish you good luck with that, as the Western world's history on that in the last 10 to 20 years has been quite difficult. But I think a good tax reform, a solid tax reform, prioritizing competitiveness and growth and certainty, hopefully is a first step anyway towards this mission. I appreciate your time, sir. That's all for today. Thank you for everyone who participated online. I'm very happy to have brought the Chilean perspective and the Chilean tax reform to really a global audience. So I appreciate your time, sir, and I wish you good luck in the negotiations for this proposal.
Thank you all for the opportunity to share our views with your audience, and we look forward to see some of them